As we look ahead to the Autumn Budget 2025, all eyes are on Chancellor Rachel Reeves and the tough balancing act she faces. Now, while the budget is on the 26th of November, and this is just speculation, I thought it was only fitting to summarise my thoughts on what may be to come at the scariest time of the year, Halloween. A sluggish growth forecast, rising government borrowing costs, and the reversal of planned welfare savings have left the government with very little room to manoeuvre. Last October, Rachel Reeves' first budget delivered a record £40 billion of tax rises. At the time, she said she was not looking to repeat this in 2025. But with the global economy still looking fragile, UK growth remaining sluggish, and committing significant additional sums to defence and the NHS, many expect the Chancellor will be looking for new ways to raise revenue this year, and the money has to come from somewhere. Now, early signals suggest we're unlikely to see significant headline-grabbing tax hikes, although as we get nearer to the budget, rumours are starting to point towards bending manifesto promises. But that doesn't mean there won't be changes. Instead, we may see quieter, more technical shifts designed to raise revenue without raising alarm. One likely measure, another extension of the freeze on income tax thresholds. This tactic, known as fiscal drag, means more people pushed into higher tax bands as wages rise, even though rates stay the same. For many, that translates into a higher tax bill, even if their income hasn't dramatically changed. There are other rumours of cutting 2p from the employee national insurance rate, while adding the same amount to income tax. This would likely be on higher rate tax than basic rate. Such a move would potentially affect pensioners, landlords and the self-employed more than workers. This is because their tax would increase, but they wouldn't receive a matched cut to national insurance. Next up, capital gains tax. The government hasn't indicated it is actively reviewing capital gains tax, but given its manifesto commitment not to raise income tax, national insurance or VAT, it is inevitable it may turn to other taxes such as capital gains tax. The Chancellor did raise capital gains tax rates last year, however these rates could be raised again or by applying specific rates to certain asset classes, for example second properties. Alternatively, she could further reduce the annual exemption allowance, which is currently just £3,000. And inheritance tax could also be on the table. With recent protests, particularly from the farming community, reliefs like business property relief or agricultural relief might face reform. Property tax. Landlords have had their fair share of tax reforms in recent years, and this does not look to end anytime soon. National insurance on landlords. According to some reports, the government may use the autumn budget to start charging national insurance on rental income. For homeowners, one proposal reportedly under review is the replacement of stamp duty and council tax with a single annual levy on homes above a certain value. Other potential changes that have been mentioned include the introduction of new, higher council tax bands aimed at increasing revenue from more expensive properties, and the possibility of introducing capital gains tax when people sell their primary home if it sells for more than a set amount. Currently, primary residences are exempt, so this would be a significant change in policy. There's also speculation around tax reliefs on ISAs and pensions. Any restrictions here could affect your retirement strategy, especially if you're maxing out current allowances. While a rise in corporation tax seems unlikely, a reduction in the small profits rate threshold from £50,000 may be one option available. Smaller changes like tweaks to employer national insurance or sector-specific reliefs might still appear. On top of that, we could see departmental spending cuts or adjustments to benefit entitlements to help bridge the fiscal gap. With VAT, I don't think we're likely to see any major changes to VAT, at least not when it comes to increasing rates or altering the registration threshold. The UK already has one of the most complex VAT systems in Europe, so making big reforms will be a huge challenge. There have been rumours about removing the reduced 5% rate on household energy bills, but could we also see changes elsewhere, like children's clothing moving from zero rate to a reduced or even the standard 20% rate? It's something to keep an eye on, but for now, a major VAT overhaul seems pretty unlikely. In summary, the autumn budget 2025 could aim to raise between 10 and 15 billion using threshold freezes and targeted reforms. While the budget is still yet to come, this is just speculation, but it is scary. So now is a great time to review your tax and financial plans. I hope you found this useful. Of course, once the budget has been released, I will do a full video summarising the tax changes. Be sure to like and subscribe if you want more clear and practical tax and business updates. And remember, we're here to help you prepare for whatever changes lie ahead.